Hello friends, welcome to my channel and thanks for watching this video. As we have ended with one more very interesting week, things are looking quite bleak and uncertain even from here, and I'm not at all talking about stock market right now. We will definitely going to discuss all about that, but right now if you are looking at economy and society, there are something which is very much, I would rather say, disturbing, and this will definitely have an impact. And that's why it's important to at least have a look at it, even if you are not going to analyze it or not going to understand it. If you don't want to understand it, it is up to you, but you too should have an information about that, because this will have an impact or indirect impact on the stock market. So let's start analyzing all that has happened last week in the Wall Street and probably things that will happen going forward in the next session of USA weekly market or USA market report weekly series. So let's start analyzing things going forward, but before that, if you haven't yet subscribed my channel, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. Now a benchmark verdict has come, and as you can see, as the title says, a rage, despair, tears fill streets across nation as thousand protest Roe reversal. Now the thing is, what these kind of things done is, they are not going to do something against the judiciary, but they will definitely going to do something against the current government. So these kind of things, and the current sitting government has a lot to be taken for the kind of things that are happening not only inside the US but across the globe. So the upcoming midterm election in November 2022 is going to be very important, because now till certain point things are happening outside US. Now things have started happening inside US as well. So this is not going to get wave off very easily, and it will definitely have repercussions on current government, which further leads to uncertainty in the market. Okay, if the government is not stable, you will definitely have uncertainties in the market. Anyways, this is one of the important news. If you want to read, you can go and read, but the thing is, this kind of things are, if society is calm and people don't have any raging issues, it is fine for the government. But if they have done something very big, and I'm talking about mistakes, and you cannot make people angry time and time again. So it's not about trial and error method. Anyways, moving forward, the overall market has posted a very good return as far as the last day of the week is concerned. After that, the big problem which you can see here is definitely from the Europe. Whether you're talking about the pandemic and the cases, you are talking about the gas supply or the kind of energy prices that are going higher. Apart from that, as you can see, Putin is squeezing gas supply. So this is one of the biggest threat for Europe. Things can go wrong. Things can go very wrong from here, and this is the time when you sit and decide whether you want to live peacefully, or you want to do something which will crash on you. So you need to. So the Europe is in a very big problem, and it is not about me who is saying that, it is about them, and they are saying that we are in problem. Still, there is no solution yet. Apart from that, double blow for UK's Boris Johnson as he loses two key by-elections. So this is, if you are looking at the overall thing, you will see political turmoil, global turmoil, stock market uncertainties, everything is happening right now. And the kind of geopolitical tensions we have here, suddenly everything just turn around, and each and everybody wants to pull one another's leg. So that's what is happening. Apart from that, I don't think there is anything additional which we have here. So the problem here is the European zone, and European zone will definitely be in crisis, as well as which you can call it as a recession, and there are enough indications for that. So for US, there is 1 quarter GDP which has already been in negative, and you will see a next GDP will release in the month of July 2022, and probably the way things are going, most of the analysts are predicting it in negative as well. So things are looking quite bleak, but it is Europe that is causing the problem right now. And now I'm talking about stock market and economic problems. So let's now discuss about the things, or about the market. So as you can see, a very sharp rally. It is not the sharpest, but yes, something is better than nothing. So Dow Jones has moved 823 points, or 2.68% on the upside. Then we have Nasdaq, which has moved 375 point, or 3.34%, and cumulative impact on S&P 500, which indeed moves 116 points, or 3% higher. Oil is very stable at 107. Then you have 10-year yield, which is 3.13, and you have VIX, which has indeed fallen 6.27%, but it is way higher than one can think. 27.23 is not at all a comfortable number, and if the VIX continues to sustain above or trade between 25 and 30, it is not at all a good sign, let me tell you, because it simply means that the uncertainty persists, and it will be there going forward as well. Apart from that, natural gas is holding above $6, is not at all a good sign. It has to come down below $6 so that we can technically call it as the upside is over, but it is holding above $6, so the uptrend is still intact. Apart from that, all the short-term, long-term bond yields are higher, and the dollar index is holding comfortably above 104. So it indeed comes back and retest 103, but right now it closed above 104. So the currency is also very strong, and this will definitely cause problem for US. If US dollar index continues to trade above 104 or more, then it will be a problem. So let's start analyzing the chart. Start from dollar index itself. So if you are looking about talking about the US dollar index, and I'm talking about the weekly chart. So as you can see, although it's been fallen, and the low that it has tested this week was 103.86, but it is comfortably trading above 104. So which is not at all giving any sign of fatigue or weakness. This is just consolidation that's been going on, and a breakout has already happened above 103. So in between 103, 104, if it continues to trade in between this particular range, that's fine. But we want this to fall below 103 or 102, or more specifically below 100. That's where you can find your momentum on the downside. But if it continues to trade like this in between 103, 104, and if it holds on and sustain above 104, then it is not at all a very good sign, let me tell you. It simply means it is taking its time after making the breakout, which further means a rally on the upside, which further means uptrend in dollar index, and which is not at all good for the equity market. Please remember this thing very carefully. Now apart from that, I am curiously looking at US 10-year bond yield, which is not at all giving any signs of fatigue indeed, and people tend to forget about the move that is going to happen by the Fed in between market digest and started moving higher. Then after some days, if Fed is really serious, which they are right now, at least. So the thing is, uh, market is not going to sustain. You have to make the market crash or make the inflation crash, make the market crash. Both are simultaneous thing that will happen eventually. And if you don't want to, then you have to face inflation. So that's the option you have here. Now, US 10-year yield has tested the high of nearly 3.5. It went up to 3.5, but it calms down. But if it continues to sustain above $3, then also you can consider this as an uptrend. So it has to fall below $3. But if it continues to sustain above 3%, beg your pardon, not $3, 3%, and once it again moves above 3.3, 3.4, then it is not at all a good sign, because then it will indicate that the next big move that will happen as far as the US 10-year yield is concerned is going to be or towards 5.2%, which is not going to be good for the overall stock market. Then you will see further money chase bonds, and it will move back to US yields, treasury yields, or old kind of investment, like bond fixed deposit or something like that. It definitely move out from the stock market. So let it fall below 3%, then we can talk or think about something called a start of a downtrend. Right now, neither dollar index nor US 10-year yield is looking comfortable, because their uptrend is completely intact. Apart from that, let's talk about the Nasdaq. And Nasdaq is definitely showing some signs of recovery, because if you are looking at the weekly chart, what you can see here, it has tested the 200-day simple moving average as far as the weekly chart is concerned for Nasdaq Composite, and started moving higher from there. So it has tested the low of nearly 10,550 and then started moving higher, currently trading at 11,600, which means a 1,000-point move from the lower end of the range. But is this a start of an uptrend? That's something which you need to ask, because as far as the trend is concerned, there is a complete potential that it may comes down again and retest somewhere in between 8,700 and 9,500 before the correction gets over. So there are still some downside which is left as far as the chart or price chart of Nasdaq is concerned. Obviously, because short covering is going on, so it may go up to 12,500 as well. So you have 800, 900 or 1,000 points more to look at as far as the upper end of the range. But as far as correction is concerned, it is not at all over, as the trend is suggesting. So let us see how far it will go on the upside, and whether it is an uptrend or not. This is a very very hard question or hard nut to crack. Now, looking at Dow Jones is also throwing similar kind of indications, where it is in a short covering move. As you can see over here, it looks like there is a short covering that is happening over here. But if you are looking at the overall trend, it looks something like that. So this is the lower end of the range, and here we are, this is the higher end of the range, right? This is the lower end of the range, this is the higher end of the range, and here we are. Even with this, it looks like Dow Jones may fall and retest 27,000 or 28,000, whatever, and if there is a big correction, then it may come down to 23,000 as well. So things are looking quite steady, but this steadiness is uncertain. That's the most important thing you need to understand, because this is simply a bounce back which is happening, or short covering that is happening. But as far as the correction is concerned, or whether it is over or not, there are no signs yet as far as the chart is concerned. So the chart will tell the story if there is any sort of an uptrend or bottom formation is happening. So we have checked Nasdaq and we have checked Dow Jones, and in both the cases it is not at all visible that something is happening as far as the bottom formation is concerned. Now obviously there is a possibility that the upside may continue for the next couple of days, but what's next? Because then again we will end up with GDP numbers or US Fed meet in the middle of July. So what's next is the question. And as you can see right now, 31,500 is the current value of Dow Jones, and it may go up to 32,800 as well. So 1,000 points or 1,200 points more on the upside. But as I told you, this does not look like an uptrend, neither in Nasdaq nor in Dow Jones. And if things looks quite bad as far as the overall trend is concerned, and market right now is filled up with lots of volatilities going forward, then it is not at all giving us a good scenario as far as the trend is concerned. So beware about the trend, and whatever is happening right now is just a sharp pullback, nothing else. But how long it will sustain is a big question, because if the Nasdaq has to move higher, it has to move like 1,000 or 1,500 points in a day to call it as a trend reversal. So there is nothing like that which is happening. So a 200-300 point move does not mean anything for Nasdaq, and neither for Dow Jones on the downside. So things are looking quite good as far as last couple of days, 2 or 3 or 4 days, hopefully probably next couple of days is concerned. But if you are looking at the overall trend or trend, it is not at all giving you that comfort. So if you want to take trades on the long side, make sure that you are keeping it for the very short term, because once things started moving, you have both the scenarios on the upside as well as on the downside. So this is the end of the video. Thanks for watching.